Right, we needed to pay attention to two news events on Wednesday. That was, of course, the CPI data and the FOMC, the Fed minutes. So how did that affect the market? First of all, we had CPI data that come through positively. Inflation is getting under control. Inflation is coming down. However, Mr. Powell slammed the market back down where he thought that it belongs. And why is that? Interest rate cuts. The market has built in 3 interest rate cuts for the 2024 period. Jerome Powell's confirmed there's going to be 1 interest rate cut. So the market had built it in. Jerome Powell slammed it back down to where he thought that it needed to be. So what kind of effect did that have on traditional markets? What kind of effect did it have on Bitcoin? How did it affect the dollar? And then more importantly, we've got your altcoin requests. I've got your Jasmy, your Brett, your Moonriver, your Spell, your Turbo, your GFI and your Kadena. It's going to be a big one. Stay tuned right to the end. Let's dive in. We're going to talk about how Mr. Powell can move the markets. Why do we look at certain markets to identify what moves are going to happen next? We're going to look at traditional markets, the S&P, the NASDAQ. It's important to look at those for forward-leading indicators because we need to know the power of Powell. Why do we need to know the power of Powell? Because if he can drive the market like he used to be able to back end of 2021 going into 2022, that's showing that Powell's got the strength. We need the strength and we need to know that the markets are reacting positively to Powell's news. So if he built 3 rate cuts in, it's supposed to be a pivot month, it's supposed to be a pivot 6 months. Back end of 2024, he promised us 3 rate cuts. Back end of 2024, the market had built in 3 rate cuts. And then Mr. Powell has confirmed there's going to be 1 rate cut, even though CPI is coming down, even though CPI is positive, inflation's under control, Mr. Powell's confirmed there's going to be 1 rate cut. How have the markets reacted? And is Mr. Powell got the power at the moment? So the S&P 500, this is going to be our starting gauge. And why is this important? We're going to look at macro, we're going to look at traditional, and this is going down the risk factor. So we're starting off with the least risk and we're going to go to the most risk. And it's important to see how the risk is derived at any point in time because the markets go through cycles and it's all about being risk on at the right point in the cycle. It's no good being risk on in 2022 when we're putting in those lower highs and the lower lows and just bleeding. You've got all the crashes, the FTXs, the Celsius. That's the wrong time of the market to be risk on. The right time of the market to be risk on is during the bull. We need to identify when the bull is, and we can get signals from that by looking at traditional markets and then calculating that against higher risk markets. So the S&P 500, this is where Mr. Powell's speech was. What happened? Did the market have a positive or a negative reaction on the back of that? The market didn't care. S&P 500 went and put in new highs, $5,454. So that didn't have a reaction, and we're going to go down the risk factor. Like I said, this is the least risk. The next one is going to be the tech stocks, NASDAQ. And similar to the S&P, the NASDAQ hasn't really been affected by Mr. Powell's news. This is Mr. Powell's news, finished on a green day, just about, and then we've had 2 red days, hovering still around support at $59.19. So Mr. Powell's power in respect of the NASDAQ is diminishing. He's losing his powers in respect to the NASDAQ. Let's go to the next thing, Bitcoin. You can see that Bitcoin is one of the ones that are usually affected by negative FOMC news. And you can see that Bitcoin, we've had a couple of red candles or 1 red candle on the back of the news, but it's just hovering around its highs again. We've had a double top here. We've had a bit of a pullback. If we stick our fib on there, how far is it retraced? You probably find that it's going to be, yeah, exactly that. It's kissed the 382 retracement level. We want to hold this 382 retracement level sitting at 66,033 on Bitcoin. This is the support that we want to hold. If we drop this, you can start looking at lower levels such as 62,000, 62,500. So we need to hold this in the short term on Bitcoin, but it's looking like it is holding. It's looking like Mr. Powell's power is losing effect on Bitcoin. Bitcoin is the least risk asset within the crypto space. So we need to start looking at Bitcoin to find out how reactive the crypto market is on the back of these news events. So the next thing, let's go macro crypto and Bitcoin dominance. What do we want to happen on Bitcoin dominance? We want it to slam down. We want Bitcoin dominance to start making its way down, showing weakness in Bitcoin and more strength in altcoins. When people have got the confidence to come out of Bitcoin, when they've got the confidence to go out of Bitcoin and go more on risk, remember we talk about the risk factor, S&P least risk, you go all the way down to the higher risk altcoins, which are the most risk. Once people are coming out of the least risk asset within crypto, that's Bitcoin, they're going into more high risk speculative altcoins, that's when you start seeing a drop in dominance. This is what we want. We want this drop in dominance. This is what we've been waiting for. This is what we've been waiting for. We want this drop in dominance, and we were holding this support zone here for 2 years before we slightly broke through. So showing that the bears have got a little bit of strength. And when you say bears, when you're talking about the Bitcoin dominance, you mean the bears are the people that are selling their Bitcoin and going into higher risk assets. That's what we want people to do. So what's the other indicator we know when people are actually doing that? It's the USDT dominance. And you can see this was our support on the USDT dominance. What's happened? We broke through and now we're testing this previous higher low. We're testing this previous higher low. We've had a rejection at that. Let's stick a fib on there, see if there's any levels that are sticking. So from its high to its previous swing low, and you can see what have we had. We've had a reaction at the 382. We haven't kissed the 0.5 level yet. It looks like it's got a little bit more maneuver to go up on there, so we can monitor that and find out. But ultimately, what do we want to happen on this USDT dominance? Exactly the same as Bitcoin dominance. Bam, straight to the downside. That's what we want. We want people selling their USDT and buying on risk assets. That's telling us that people are going off risk because they've got dollars. When people are in fear, they flood to dollars. That's their off-risk safe haven. When people are spending those dollars, their USDT, and buying altcoins, what's happening? The market dominance of the USDT goes down because it's going into other high-risk assets. This is why we want this move to the downside. This is why this move to the downside is important. This is why we're using this, along with the Bitcoin dominance, as our leading indicator as to when that's going to happen. And then, of course, what does that coincide with? Our total 3. Once dominance goes down, once USDT and Bitcoin dominance goes down, that'll be an indication that we're going to see a spike in total 3. That's going to be the alt season. This is going to be the confirmation that you're going to get alt season. First, it's going to be this drop. Then it's going to be this drop. Then it's going to be this move to the upside. Bam. This is all 3 of those are going to confirm alt season for us. That's going to tell us when the altcoins are going to run. And then we can go to the Dixie. You know I like the Dixie, but the Dixie is my leading indicator of the strength of the dollar. So it's measured against a bag of fiat currencies. I tell you all the time, it's the Great British Pound, it's the Euro, which is the biggest one against the dollar. It's got the Japanese yen, it's got the Canadian dollar, and a bag of fiat currencies. So the strength of the dollar is important for us. It's an important metric for us to know because obviously when the dollar's strong, a lot of things are off risk. When the dollar's strong, people are undecided. People are thinking what the next move should be. So you can see here the Dixie, we're getting a big, strong buy-up candle on the DXY. People are going into the dollar at the moment. In the short term, that's showing us in the short term. We're not making these big spikes to the upside like this, like we were back here in 2022 and 2023, start of 2023. So this is positive. We just need to monitor this. This on the back of here isn't great. However, this can quite easily reverse within the next few days. And this is the reason why we have to look at all these in conjunction with each other. Right, let's jump into altcoins. But you're thinking weird altcoins, right? So before we get into the altcoins, I've got some exciting news. This is my friend Brandon from the Boring Passive Income Dad. Go and check his channel out. Go and subscribe to his channel. I'm going to be working more closely with Brandon, and I'm going to be working more closely with Crypto Grit, Jellicoe from Crypto Grit. They're both smart guys, both specialists in their field, and we can all learn a lot from them. Brandon specializes in passive income. He teaches you that there's another way to life than the 9-to-5 grind. And Brandon has never worked for anyone in his life. Brandon has made it during the 2021 bull run, and now he's got the house of his dreams. He's got a lovely family. He's a lovely guy, and he just wants to teach you what he knows. So we're going to be working a lot more closely together. Check out Brandon's channel and let's dive into your altcoins. And apologies guys, it's taken so long to get to your altcoins, but it's important that we understand, we go through this process and we understand the risk factor, we understand the power of Powell. How powerful is Powell at this moment in time? So we looked at the speculative assets, we looked at the least risk assets within the crypto space, within the traditional markets, and we could see that Powell's power is diminishing. That's a tongue twister. Powell's power is diminishing. So we looked at the altcoins next. We're looking at the altcoins next. We're starting with Jasmy. What did we expect to happen on Jasmy? We expected a reaction at this level, and we expected a pullback. If you remember on Jasmy, we had a bearish divergence that was indicating that that was the case. What was the bearish divergence? We just pull that up, get rid of the stochastic, pull that up. You can see We put in a higher high here on the RSI, and then we put in a lower high here on the RSI. This was indicating that the buy-in pressure wasn't matching up with the price chart. We expected a pullback at this level. We knew that there wasn't as much momentum. The RSI was telling us there wasn't as much momentum. We were waiting for a pullback. So how much do we need a pullback? Let's stick our fib on there. We know that a 382 in a healthy bullish trend is a good level. You can see we reacted from the 382 once, twice. So we've had a reaction at the 382. That's going to be our support zone for Jasmy. So that's sitting at 0.033. The next level is going to be our 618. What does the 618 coincide with? 618 down here. 618 coincides with this previous resistance level that we need to flip support. So this is still my range. The 0.027 is going to be where I'm interested in. How is price going to react when we get here? Is that going to hold as support? This is where I'm going to monitor it, and this is where I'm going to make my decision on Jasmy. I'm waiting for it to pull back, and you guys know as well as I do, I've been waiting to get into this for a long time. It hasn't pulled back, it's just kept going up and up. So I'm waiting to get into Jasmy too. Right, the next one, Brett. These ones are going higher in risk. This one's more volatile. What kind of a swing have we had on Brett? Let's go from the recent swing here, from that swing low to the swing high, and you can see we've had a reaction at the 382. It's pulled back, it's hit the 0.5. It's looking like there's a strong possibility we're at least going to go back and test this 618. 618 is sitting at 11 cents, just under 12 cents. So it's quite a difficult one, Brett, because we haven't got much price action to go by. This was the previous strong resistance level that we expected to flip support. We flipped support here. That's sat at 7 cents. And now we're waiting for this pullback on Brett. So it's one of those ones. The way that I play this is laddering in my position. What I'm going to do is stick a trend line on there, and I'm going to monitor this trend line to the downside. I'm going to wait till it cracks. And what's the advantage of waiting till it cracks? Because price action could do this, move all the way down to our 618 before it comes through and breaks trend. What does that mean? Cheaper prices. This is how you can just monitor the trend, stick a trend line in, wait for it to break. Once it's broke, it's telling you two things: that the bulls have regained momentum in the short term, and more importantly, that you can allocate risk management. You put your stops below the low, and then you can ride the wave up. If you put in higher highs in, you can ride trailing stop losses. Then when you're wrong, stopped out at a profit. That's how you can play it from a trading perspective. So that's Brett. Let's look at Moon River. Moon River. What I want to do on Moon River, I'm going to zoom out on Moon River just to show you how much this thing has bled. So let's go right out on Moon River. In fact, I'm going to go in the weekly on Moon River to show you how much this thing's bled. So our 382 retracement from its all-time high to its bear market low is sitting all the way up here. So this is just a 382. A 382 retracement from where price action is now is 1,355%. Now, this is really going down in scale in the risk factor. This is high risk. You can see where Moon River's been before. If we just zoom out and zoom out, this is the weekly. Moon River has been at $538.47. It's currently trading at $13. So what does that mean as far as portfolio management is concerned? If I'm interested in Moon River, I'm putting a small allocation of my portfolio into Moon River. You're talking 1-2%. So I'm not putting much in Moon River. Zoom back into the daily now. That's a high risk one. Let's get back on a fit price. And the next request is Spell. Spell, let's have a look. So what kind of fib reactions have we had here? From its swing high to its previous low. We've had a reaction at the 618. This is the area that we need to overcome, the 618. You can see how price has come back. It's reacted at the 618. We talk about the golden zone. How is price going to react when we get to the golden zone? It reacted negatively. We had to pull back to the downside. So the two ways that I play this, from a trading perspective, from an investment perspective. The way that I do it from an investment perspective is we've made a base here. I'll be looking to accumulate at the bottom of this base here. We've touched this and we've held support once, twice, 3, 4, 5, 6 times. So from a dollar cost average perspective, this is like dollar cost averaging on steroids. I'll be allocating small amounts of my position. If I had $100 in this, I'll be putting $20 in here. If we come back and test it again, $20 in here. When would I be interested from a trading perspective? I wouldn't be interested until we get above the 618. Once we close above the 618, then I'm interested from a trading perspective. I can protect myself because we'd expect this to hold as support by putting a stop loss below the low once we've created that higher low. So from a trading perspective, I'm not interested. From an investment perspective, I'm quite happy to dollar cost small allocations of my capital in at these lower levels. So that's how I play spell. The next one's going to be turbo, and you can see, look at this thing, absolute rocket. It's probably had a reaction from its 382. Let's check. It's actually lost the 382. It's lost the 0.5. Next level is going to be this 618, the golden zone. So if we just build that in, build the 618 sat at 0.0039, so pretty much 0.004. So that's the 618. You can see that that's held support here. We've held support here. We'd expect that to hold as support again. I would, again, stick a trend line in. Wait for momentum to be broken. This is the momentum line. Think of this as your momentum line. Each time that we're getting rejected here, getting rejected here, getting rejected here. Why would you be interested when you're getting rejected? We could come down, we could carry on coming down all the way down here, and that could give us opportunity at lower levels. You know you could put your stops below the low. You know once you've broken, the bulls have regained momentum, and more importantly, you know if you're wrong, your tight stops, you're out. You can accumulate at lower levels because you've stopped out in cash. So from a trading perspective, that's how I play that. If we come up and crack trend here, you could still put your stop loss below the low, but just know where momentum lies. Know when the bulls have got short-term momentum. Next one, GFI. GFI, looks like we're losing support on GFI. In fact, we are losing support. So this is the candle close support, and this is the extreme low support. So we're holding the extreme low. We've lost the candle close support. Why is it important? Because these wicks tell us that price action is volatile during the day. When you've got a wick to the upside, that's the extreme highs of the day. When you've got a wick to the downside, the extreme lows of the day. When you get the close of the body, that's the close of the day. And that's where price action tends to stick. So losing this level is quite important. I want to see how price reacts to this level. And ultimately, I want to break and close above $2.93. So I'm not interested in this GFI just yet. I want to see how price action reacts once it gets above the $2.94. You've got a psychological 3-level barrier to overcome as well. So you've got a couple of resistance levels indicated here by the smart money concept. So the Lux algo. Right, the last one is going to be Kadena. Kadena, we had 2 fake outs on Kadena and we've lost support. We're holding 65 cents on Kadena. And ultimately, guys, I want to break and close above 77 cents before I'm interested in Kadena again. From a DCA perspective, you've got this support here. This has acted as our last ditch support before we come back into this range, and that is sitting at 64 cents. So we need to hold 64 cents on Kadena before I'm interested again. We need to break and close above the 79 cent level and test the 80 cent level. Test the 80 cent level. Right, okay, if you did find this useful, guys, don't forget, let me know in the comments what you want me to cover next. I'm going to try and do some more longer videos just like this. It's important to know the power of Powell. Let me know if you like that narrative. You want me to drive that narrative forward, because I'll build in news events in my future videos. And if you do want to see more of my altcoin requests that you've provided, check out my playlist, and I'll see you in the next one.